Yeah, sorry, talking about Wolf Game.
All right.
There's a bunch of different assets in there. So within this game, we've talked about this before in other episodes, but there's, we characterize it as like a Ponzi game. And now it's trying to evolve from a Ponzi game into an actual game with like some kind of sustaining economy. And so where we're at is there's a few different assets. There's
What's the
wool.
website for this, by the
There,
way? Wolf.game?
Wait.
well, I'm looking at a different one. One
Also,
of the
Nick,
guys.
switch your microphone
Oh, okay.
to your
I'll do that.
yeah, good.
Little technical audios. Okay.
And I think it's cool
Oh.
if you say what Beanie said about the velocity of this game, because that makes it probably more interesting to people who aren't invested in it. It's actually pretty big deal.
Yeah.
Yeah. So quick recap. I mean, Wolf Game, NFT based game. Perhaps the first one that ever really caught like massive fire. We were in that on the ground floor, and we've seen some ups and downs, but the last few days it's just absolutely mooned again. Saw sheep trading over a 1 ETH floor. Your little pixelated sheep. But Nick, you were following this a little more closely than I was. What the hell happened?
Well, it looks like, one of these influencers on Twitter, his Twitter handle is Beanie, I believe. But in any case, he really just started like getting on his microphone. He's got quite the following. So usually anything he talks about gets attention. Whether it actually does well or not, it's a different story, but it definitely gets attention. And this one got more attention. It brought back attention to it because it originally did really well. And he just started not necessarily like pumping it, but more of like bringing out some facts about it. And he had like one quote where he was essentially saying that a fund manager had came to him and said, do you know that Wolf Game, is grossing like $150 million within what's it been, guys? Like 6 weeks, not even, of launching. And that is probably the highest, amount in that short period of time for any game, blockchain game, traditional game, to gross that much amount of money. And again, this might be volume. So I'm not sure if it's like what qualifies here, because in traditional gaming, the game company gets all the money, but here, the money gets traded back and forth between the community. Mm-hmm. But I'm kind of kicking myself in the ass here because we were sitting in the office staring at like a 3.7 cent wool, and we're like joking, we're like, wow, this is probably like the best, risk adjusted, upside here for this game that's been quiet because it originally got hacked and they had to rework it and they put a pause, and they're forecasting some kind of launch in this quarter. And so everyone just kind of like didn't really pay attention to it. And so that's usually the best time when no one's talking about it, people feel down on it. And then obviously, the megaphone started going off and people started, talking about it again. Wool is currently at 20 cents. So that would have been probably like a pretty easy 5X.
20 cents.
Let's go.
I know we were talking about buying it. We were talking about how it was going to be a good play to buy it at the bottom there. We just,
it's just like a classic
one of those
example.
things we never pulled the trigger on, but we already had so much exposure.
So
yeah,
much.
I mean, listen, I'm happy the amount that we have is like in there and doing well for sure. You can't be mad at that. But this is like a good example that at least I find myself in a lot of times, and I'm sure other people do, where you have a little bit of exposure, or maybe you wanted to but didn't pull the trigger fully, and it just starts ripping, right? The token's gone up 5x. The individual, assets, like I owned a Gen 0 Alpha 7 Wolf, which sounds like gibberish if you haven't played it. But in any case, I bought it for 2 ETH, sold it for 19, and it went down back as low as 4, and now it's back up to like 22. So you're talking about like real money. There's real money being appreciated in these assets.
What's 22 ETH just in dollars?
80 grand.
80 grand. Yeah, Jesus Christ.
80 grand.
For an in-game asset. It's unbelievable.
Right. So
yeah.
It's good money. So anyway, I guess the question I was bringing up, when you see these run-ups, and I've bought when these run-ups happen, and I've been punished for it in the past. So, what's the best risk-adjusted way? And, you could say, well, DCA in, maybe you buy a little bit right now and just kind of watch, That way you have at least some more exposure and you're not kicking yourself if it keeps going. And then you kind of DCA on the way down if someone takes a lull. But I think it's also important to bring up there's other ways to play things like, and Steven brought this up, I think when we were in person, that you can play it a different way. Maybe you buy some wool and you deposit wool and ETH in a liquidity pool and earn some trading fees while you're holding this. So maybe it's some way of like, offsetting your risk, although that comes with other risk, like, obviously impermanent loss if one of them takes off. We can talk about impermanent loss later. But in any case, I'm just looking for what your guys' thoughts are on, you think this thing, and I should maybe give some context. I guess the bull thesis for this is that you see Axie Infinity got started in 2018, has been one of the top applications on Ethereum. The DAO token has been growing like crazy. The in-game economy token has gone like crazy, although it's, they've both seen some recent dips. And it's a really vibrant, multiple million DAU game that really, kind of showed us that, wow, blockchain gaming can bring a lot of people into crypto. And so I guess the bull thesis is that this could be that, but maybe on a much potentially bigger scale. So that's the context. And I think it can be applied to other NFT investments. So just be curious what you guys think when you find yourself in these scenarios.
Well, I also find it interesting. I just find it interesting how all the copy pastas also attempted to do the same thing, had like a medium, some of them had no success, but some of them had medium success, but then they faded away. And this game that has still been locked up, where you haven't even been able to stake. I mean, the old shepherd came out and said he's bringing staking back. This is sitting here and still doing more volume than all these other games combined. So I also think it's really interesting to just look at why and how long that will last, because it really seems like there's something special here now.
I love this question. I think that's the right way to approach it, because man, I think about this and I compare it to other NFTs where it's like you have a bunch of profile picture projects. Some take off like Bored Apes or CryptoPunks, and some, like there's a million other examples that turn into nothing. And what like is the difference? It's like, well, the projects that work get sort of like anointed by the audience, and this Wolf game has seemingly become one of those anointed projects. So like, to use Nick's example, like if you want to like dollar cost average into a project that's not anointed, you're like just throwing good money at bad and you're just wasting your money. But I think like maybe on an anointed project, maybe that does make sense.
Yeah. Well, when it comes to dollar cost averaging, I like, one of my big things that I've learned is that when you see something in crypto and you think it's a good idea, or there could be anything there at all, you have to just immediately buy it. Now, you don't have to immediately buy all of it. You could buy like the tiniest fraction of it. But I've found that like when I don't buy it, I forget about it, right? Or it'll go way up and then I'll be tempted to sort of like FOMO in at the top because I have no exposure and it's just like so painful. So when you think something's a good idea and you buy just like a little bit of it, right, it now will occupy like a space in your brain, and you will be following it, and you will be having a reason to go and like research it day in and day out. And you give yourself a chance to kind of like build actual conviction in the project, which is good. And then you also give yourself the optionality to dollar cost average in, like if the price is stable or if the price dips or whatever, and you've built that conviction, it just gives you so much flexibility. It really sucks to kind of be on the sideline and just go completely all in, or like not touch it at all. Wolf Game was one of those things where I saw it and like I kind of knew that it was going to be good, right? You just get like a sixth sense sometimes. But at the same time, I wasn't super bullish on NFTs at that moment, and thought like, there was so much fluff and just trash like everywhere when this thing launched. It was insane. There's so many derivative projects. But the fact that there are all these like clones and derivatives, just like they're doing so much volume, it tells you that there's like a real hunger in the market for something like legitimate, right? And if you come into a market with something like Wolf Game, like a market that's just like trading complete like ripoffs and doing like huge volume, with something that's like really cool and like a little bit innovative, right? Then you just sort of know that that's going to explode, right? When you put it in that environment.
So what
and
are
it's
some
like a really
what are
good
some,
thing I
like,
did that with Wolf Game because I
what
only
are some
put, like, a little bit
characteristics
in.
like what are some characteristics of Wolf Game that you could identify in advance that might
Yeah.
make it more likely to be one of these anointed projects? Because, like, you could choose a different one. You could choose Bear Game or whatever the hell we
Well,
played.
Bear Game didn't exist, right? So
Sure.
what was
Wolf Game
really
was
good
first.
about Wolf Game
It's
was that
novel.
it was
It's
first,
novelty.
right?
First,
And
So Wolf
like
Game was
being
first.
first is so important. So that was one thing, right? I knew it
Also
was
having
first.
the support of huge influencers like Beanie and who, like, I think Banks was in. Like, I don't know, there's big NFT names were in on the game. That's
Yeah.
important.
Certainly doesn't hurt. I think Wolf Game also just had a certain sort of like je ne sais quoi to it, you know? You just like looked at the website and the game and the art and the Twitter and all of it. Like when you look at like 1,000 different projects, I think you start developing like a little bit of a spidey sense almost. And you sometimes can't put into words why it's going to work, but you just see it and you're like, oh my God, like this has a chance. Like this could be
So true.
something.
It's almost
Yeah,
like that,
I agree
that might
with
be the
that.
best barometer.
I do think they're identifiable though. Like I would interpret that as like one of those characteristics would be nostalgia. I think Wolf Game brings back a sense of nostalgia is a characteristic that we would look for. But to me, the most important one, far and away, the reason that Wolf Game is successful is not because of the influencer action. It's not because of the nostalgia. It's literally because it's innovative. It was the first mover in a completely new way, a whole new novel concept. Yes, it's a derivative of a few other concepts and it's not purely any one thing, but it's the first time we'd seen anything like that. And when you combine that with chance, people love to gamble and people love that, like that first few days of Wolf Game, which we already talked about this on another episode, so I won't beat it too much, but it's like was so exciting because you were sitting there and you were minting and you didn't know what you were going to get. And every time you did that, you were either going to lose something or gain something of value, which today, some of the things that I've gained from those first few days, I mean, each one is worth like 10, 50, like ETH. We're talking about like one of the wolves, even a Gen 5 right now is worth like 15 ETH, right? So it's absolutely wild to like mint something like that for practically free. So I think knowing that gave people all they needed to then have high conviction, to lock in their assets and not want to go away from the project, which was the other variable that has led to success. Because the moment that the project froze, that minting paused, that the hack happened, people could have abandoned it. So the next question is, why didn't they abandon it? And I think that was so exciting to them and it was so novel to them that they now became like ambassadors of the community, where it's like, even if a Bear Game or a Wizard Game did come out, they'd be like, fuck that. I'm a Wolf Game OG. I am going to wait. I am going to hold until this thing comes back, and this thing is going to be the winner. And I think that's the mindset of people in this game.
Well, you know what this is that I think you pointed out? This is like the concept of like legitimacy, I think. And in the world of Ponzi, NFT, DeFi games, like Wolf Game, like very quickly gained like a lot of legitimacy, and I think that's like a big reason for its continued success. We saw games like Wizards and Dragons or whatever that game was kind of came in and did take like a good chunk of market share because Wolf Game was down and it was kind of failing a little bit, and people wanted to play. But ultimately, Wolf Game is back on top now. It's like it's the OG thing, and I think we know that in crypto, one of the best ways to build a community is to make your community rich, and
right.
Wolfgame did a good job of that. I mean, Wolfgame was like a very easy like 100x for anybody who just minted and held for like any reasonable amount of time. I mean, it was pretty crazy like how nuts things got there.
Yeah.
So
How
back to
fast it
Nick's question. You know, it's like, so what's the approach here? How do you play this? We're obviously chasing if we're investing in right now. I think I loved your take, Stephen. It's like when you see the opportunity, strike, because then you turn your attention toward it. You also don't have FOMO later where you make an irrational decision later. So we're all in a good place with it. But to your point, Nick, it's like you could see another 50x from here. So
Yeah,
how do
I
you
want
play
more.
that? And what's the timing? I want more too. So it's like when land is sitting at like half an ETH, it's like, is that a good buy? You know, like wool is at 20 cents. Will this sustain itself until the game goes live? So do you have a thesis of how you're going to play it between now and
Yeah.
the game launch?
I mean, I give this advice to people who ask me about crypto in general, like, hey, I don't know anything about Bitcoin, I don't know Ethereum, and I say, take however much you were planning on investing, take 10% of that and buy it today. And primarily one, just so they could DCA in, but also once you get in, you have ownership over something and you naturally learn a lot faster about it because you start watching it every day, and then the faster you watch something, the faster you learn and it picks up. So I'm gonna buy 10% of whatever I was thinking of doing. And then, you know, with these announces, it kind of reminds me of like, imagine having an earnings call on a stock like twice a week, you know, and it's kind of like that. Like in the community plan, the project owners plan this out because they understand that like building hype and narrative and momentum is all there really is until you have a deliverable product that's proven successful. So what I expect is like some intermittent thing to keep everyone interested. But they did mention the game was going to come out later. They might have like a mini game sooner. So I guess just like every week, take a temperature and, buy a little more. But hopefully there might be some times when just things kind of, lull down because like, it does take a long time to build a game like this. I mean, typical games take years to build. And I think they learned their lesson of making sure they had very audited contracts because they don't want to have another issue happen. So I do think they will be a little more diligent about what they develop. But anyway, I think I might just chip away here and there. Might provide some liquidity and
chip away meaning buy or chip away meaning sell.
Oh well, I did sell some of the farmers I had because I just went through the roof, and I think those are going to be like the last piece of the game to actually have impact. So there'll be time, for those to like have their own little, time in the sun. So yeah, I might provide some liquidity, and I know, and this might be getting a little too technical, but in Uniswap V3 you can provide liquidity for certain ranges. So might provide something at the lower end where wool is a little cheaper, and might I guess have some intended and permanent loss there. I don't know what the best way to describe that is.
More of like a limit order where you get paid to buy wool.
Right.
I think I'm a seller of wool at around 20 cents with the thesis that like if people are going to sell Bitcoin at 60K, that's actually like a good asset. Like wool is a maybe asset, and at the sort of like highs of wool, I'm probably a seller.
What's your Ben Cohen risk level of
dollar's like too good of a meme for wool, right? Like the dollar is too good of a meme,
going to
right?
what?
It's at least has to sniff a dollar, right?
Doge can't even go to
at
one,
least
dude.
has to go to like 60, 70 cents or something, right? And get everybody pumping that, and then you kind of exit, you front run everybody there. 20 is too cheap if this game takes off, I think. Because what's the market cap now? Like 10 million or something on wool?
I think it's 20 is what we talked about in the thread. Is that we calculate it's roughly 20 million. You look at SLP which is the in-game currency of Axie, which everything's just taken a dump, but it's at an 80 to 90 million market cap. So that could be your theoretical top. But I think you do have larger money players at stake here.
Is SLP deflationary though? SLP is inflationary, isn't it?
Exactly. It's inflationary.
So that's not the top then. Yeah. I mean,
yeah, it could be a lot more, and so
And like also like a 90 million market cap could be like a $5 wool price. So it depends on how much of the wool gets burned in the playing of the game, right? Because it's deflationary. You need to use wool to do stuff in the game, allegedly.
You guys,
And,
stop getting too bullish. Getting too
But
bullish.
guys, this is
Bullish.
whichever way it goes. It's like way too much fun because like there's so many different ways you could try to model this out, right? Like you could take other existing games and like figure out what the gameplay might be, and then figure out which assets might have the highest EV and which, like I said before, like I want the assets that take a take rate on the whole economy, right? Like not like a single asset within a game. That at least feels right. But then I don't know. There's just like a whole lot of things you can model out, and back to why this thing and understanding why it's done well was like, our reaction within ourselves in the thread, like we were all just like fascinated by like, well, how do you figure this game out? Like it's obviously like an EV game. So we just got to find the right calculation. And I think our reaction, and maybe this is why good for people to have groups of people they talk with stuff, because it's like invaluable to have. And maybe one day we'll broaden the community a little bit and let everyone in there. But in general, maybe soon.
Maybe.
You know what Wolf Game reminded me of? It reminded me of when you like go to the casino with like seven of your buddies and you play
was just gonna
craps
say that.
and you're rolling and you're having the best time.
High
You're
fives all
screaming.
around.
Somebody's trying to like calculate the odds of something, even though it doesn't matter at all. Like, but that's like what it was like. We're all in the group chat. It's like just like some guy just keeps posting the floor as it's going up, and somebody's posting screenshots of the wool price, and you got the guy that's running a regression analysis on like what the valuation of like sheep should be. If like it was just so fun. Like people in the group chat were at one point we're like, we don't even care if we lose all our money. It's just about all the memories we've made along the way at this point, and it's just like
It really is like the craps table.
I've never
like,
invested in another asset that like had that interactive, gambly, fun community element to it, and it was like so good. And when the game broke, people were like heroin junkies. Like
It was depressing.
I need my fix. Armand wrote the game off completely. He's like, I'm done with this. It's going to zero. What's the next
Did
game?
I? What are you talking about? Oh, I needed the hit.
I was the only one who remained steadfastly bullish on.
No way.
Everybody
No
turned off.
way.
Yes.
No, I'm
Even
not
holding-
accepting that
We're
at
all
all.
holding it.
I'm not accepting that at all.
You guys
I don't
were
recall
hating.
any of
Steve
these
was
statements.
hating. Armand was hating.
Find a screenshot.
Jason
No
was,
way.
like,
I was
demoralized.
talking about recreating it. What are you talking
I
about?
am
Yaniv and
going
I were
to-
like, we need
You
this.
wanted to recreate the game because
Yes.
Wolf was dead and you needed a new game. That's exactly
No,
right.
it wasn't dead. We just needed to
You-
find that
it
window.
was dead
and
to
own it.
you. I'm
That's a
digging up the
touche.
group chat. I'm digging up the evidence in the group chat.
Yaniv sold the Golden Wolf for 2.5 ETH, and
we
it
don't
just
want-
sold
Oh
for
my
69.
God,
Yeah.
that Golden Wolf.
What is that worth?
100 ETH now, if that.
No,
it's
it's
probably more.
sold for 69 ETH the other day. Yeah.
Yeah, so
Yeah, I mean, some of the
probably-
boys
yeah.
had
That's a
seven-figure,
rough.
assets within the game. So they've continued to peel off some, and also hold through it. So I think they're going to be certainly and mightily rewarded for it. But this definitely feels like the casino, man. It's like, at the craps table, you got the idiots buying the hard numbers. Like, come on, that's not good. You got the guy who like read a book on craps. Like, no, guys, this is the way that you should play, that the math says. And it's just freaking hilarious.
Okay, we need to like
You
see
had this
everybody.
little pixelated money printer. You had these little sheep
we need to
in your
post
little
this
barn and they're
clip
just printing
to
money.
like the Wolf Game Discord, and we need to like tag this in their Twitter. Like this is like we're like the biggest
This is
Wolf Game
everyone.
pumpers of all time.
This is how everybody's feeling in there.
I think you can't
Yeah, you
deny
learn-
Sorry, I was gonna say, you can't deny like the fact of having risk and just like the gambling aspect of that intermittent random reward. Anytime you can give someone an intermittent random reward, that creates addiction. And I think you can do that even in projects that don't have like a risk involved, but you can do it like a Pixel Vault does this really well. They create risk and intermittent random reward just in collecting their assets. Like if you hold this one, you might get another one, or you could burn this one in exchange for the other one, but you don't know what it'll be worth.
Yeah, the
And-
choice. I like the risky choice.
Yeah,
Like,
so we should
choose your own
fork
adventure.
the wolf game, and then the sheep should just like make like a mystery box. Just open the
Yeah,
mystery box.
you can get
don't-
2
don't
ETH,
get, like,
or you get the
consistent-
mystery box.
You can get a boat.
Like a wolf just steals all your sheep, and you're broke. It's like, yeah. A boat could be a boat is a boat. The Family Guy.
The mystery
Yeah,
box could be anything. Could be a boat.
Could be a boat. Classic.
Yeah.
By the way, Nick, I fact checked some of your video game stats here.
Please.
So it does look like Wolf Game has probably done roughly about 150 million USD in revenue, depending on how you want to define revenue, which is
Volume?
crazy. Yeah, across like the mints and all of the assets, and I'm not even sure of what you want to factor in for like the token and everything, right like that. But this is just like the NFTs, right?
150 mil in 6 weeks. Oh my god!
So from frame of reference, GTA 5 sold 11 million units in 24 hours.
Okay.
So that's probably what, like 550 million or so in sales.
Just crushed
Yeah, so
it. Crushed it in a
that-
day.
Pretty nutty. But if you go
GTA
down
5.
1, 2, 4 spots to Halo 3, 3.3 million units sold.
Damn.
That's you're talking
So
about.
that's
number
basically
3 and 5 in.
So Wolf Game on this chart is basically Grand Theft Auto 4.
But are there
So
any
it's like
Genesis?
top 5 of all time, any game, any platform.
But are there any Genesis
that's so crazy.
games
That's so
at the top
crazy.
5? Or are these all like, number 3, number 4, number 5 of a brand? Because it wasn't like this is like Wolfgang number 3 and everyone already became millionaires off the first 2.
Look at Nick getting technical. It's not apples to apples.
I don't know why I'm defending a stat that I didn't even like create. I just read off some guy on Twitter. Anyway. But I guess
that's nutty. That's nutty. A little pixelated NFT gambling game is effectively like top 4 or 5 video game launch of all time.
I guess it's good we're having this conversation because like one of the questions that you guys know that we have like a gaming guild with scholars, and we buy assets and scholars yield off those assets. And so I think a broader question just for everyone looking at the space is like, will play to earn gaming kind of like fulfill its promise this year? I think it eventually will. I don't know if it'll do it this year, but will it onboard people who don't really care about crypto at all? Will it bring in some fun? I think this is like not a play to earn game. It's like a risk to earn game.
Yeah.
But there's going to be all kinds of new categories that we haven't even thought of. And so it'll be curious to see, what happens this year, if it kind of like lives up to the hype.
It's a great question.
By the way, shilling my own bags here, but Chicken Farm on AVAX.
Oh, I'm a chicken farmer.
Did you guys get into that? I showed you Chicken Farm at the bottom. Chicken Farm.
Yeah. How we doing?
16x now is now 16.6 AVAX for the floors. Egg, last I checked, was trading like almost $8, which means that
let's go.
One chicken is yielding you approximately 450% or so interest per year in terms of eggs laid.
CHIKN.farm.
CHIKN.farm. And what I like about Chicken Farm is that it's like Ponzi games for the people, right? Like it's on AVAX, so it's like 20 cents to harvest your eggs instead of like $400, and anybody can do it. And it's got a unique vibe to it too. I do like the chicken NFTs. They got some swag. They got like little Captain America shield here on this guy. This guy's actually got a tungsten cube for a head. So that's good. And some Ugg boots. Man,
how big is the AVAX NFT space? Like how competitive, how thriving?
I mean, it's way smaller than Ethereum, but I am kind of bullish on these like all like NFT spaces, because it's just so like the ETH NFT space is just so silly. Like we keep playing these cycles over and over again, where people get rich on something new, and then they want to like shill like their bags to all the new people and tell them how great it is so that they can like exit. And we did that with Bitcoin. We kind of did that with ETH now. And now we're doing it with like ETH NFTs, where everybody's like, oh, NFTs are so amazing, but you got to buy them on ETH. You got to buy them on ETH, because if they're not on ETH, they're trash. The stupid like JPEG of like a polar bear, fishing or whatever they do. It doesn't count if it's not on ETH. You got to buy my ETH NFT bags. And I think a lot of people are going to opt out on that. Like they've opted out on the Bitcoin narrative. Like a lot of people are opting out on the Ethereum narrative. Like people want to get rich on their own stuff from the ground up. They want to play with things
Yeah.
that they can afford. And wouldn't shock me in the slight. I mean, everybody sort of thinks that we are going to have a lot of NFT adoption on layer twos and, you know, platforms like Treasure LOL and Immutable X. And we probably will, but like I do think that you may see unique ecosystems spread up on AVAX, on like Phantom. There already is.
Well, we're
like a
seeing
pretty
an
vibrant
incredible one on Solana, you know?
right?
Yeah.
So I think this, and I think these types of games that are interactive, where you have to like do a lot of actions, are just awful on ETH for obvious reasons. Like I've probably spent like $6,000 or $7,000 in gas just playing the Wolf game. Like it's just not normal.
Yeah.
Oh, it's depressing to
It's
even
just
look
not
at
normal.
your
It's
stats and
just
how
like,
much you
it's
spent.
just, yeah,
It's so
like
depressing.
it was ridiculous. And that's probably a slight exaggeration, but it's probably it's for sure at least like $2,000 between the minting and the harvesting. It's a lot of it's just like a lot of money.
No, and
not
it's
realistic.
something it's something we just like have completely accepted with NFTs, because, you know, and when I say NFTs, it's just like basically NFTs is the Ethereum NFTs up until this point, and it's like a huge barrier to entry for most people. I mean, I got a message today just being like, man, I really want to like get involved. I want to dip my toe in the water, but like the only NFTs that make sense for me to buy, like I can't afford, and the rest of them just feel like I'm just going to be left holding the bag. I'm going to get scammed. Something's going to happen, or I'm going to lose my gas money trying to mint something. I'm going to walk out with that initial amount that I wanted to invest, and I'll have nothing else. And I lost even what I wanted to originally put in just gas. And so that's not accessible at all for most people, and that problem's not going away. So I think that if these marketplaces do a good job of like, probably going to have to do the same thing that the ETH NFTs did, which is to get influencers involved. If they do a good job of that, and there's like some new Solana, some new AVAX NFTs that get some big names behind them, I think you could see a very different year this year, and a lot of people sort of moving to these other marketplaces, because it's not sustainable the way it is right now. Then the question becomes, will ETH be able to win back its users? And I think it might be a little too late at that point. And I'm not talking about Ethereum as an asset to hold, but I'm talking about NFTs specifically.
Right.
It could be too late.
I think that the best influencer for these is, you know, how many $1 million NFTs do you have on the network? Like in Solana, I think it's like there's maybe like one or two. And I think as you hear about some of these reaching high numbers, you know, it's like almost common to have a lot of projects have, you know, on at least on Ethereum, have $1 million price tags, which is kind of like it's a part that like breaks a pattern in your brain where you're like, wait, what? And then you pay attention. And so I think once people realize that, well, people are also making money playing little Ponzi games or Ponzi NFT projects or Ponzi PFP projects on other things, then it'll get the attraction. Like in an efficient market, the money goes where the yield is. So we'll see what happens.
I mean, ETH doesn't have like $1 million NFTs because like the NFTs are just like inherently better necessarily.
Right.
ETH just has $1 million NFTs because there are so many whales on ETH who bought like sub $2 Ethereum and have made just stupid millions of dollars, that there's just like it's just supply and demand. There's just like a lot of demand for those types of assets on ETH versus like a chain like Phantom, right? Like that chain's very new. It's very new. Granted, it's done like 1,000x in the last year, and some people have made like a ton of money, but it's not at the level of distribution that an ETH is in terms of like the sheer number of whales using it. But I expect that over time, as some of these ecosystems evolve and have their own giant subset of like well-distributed whales, and we can argue about whether that distribution will ever actually look like Ethereum's. It probably won't, realistically speaking. But if there are whales who are attached to that ecosystem, and those ecosystems do develop their own culture the same way ETH has it, then it's totally reasonable to expect like native projects to pop up on those chains that do have these like super luxe NFTs. I mean, the biggest thing we've seen so far, I think, is like the monkey business on Solana.
Yeah.
Right. Like those have done incredibly well. I have a friend who owns a lot of those and likes to shill them on Twitter. good for him.
What-
but like that,
what builds the
prime
whales?
example.
So
What brings the-
that's what I was going to ask as well.
What
It's such
brings
this
the
whole
whales,
topic
the whales are grown in the ecosystem, right?
From being early
Ethereum
early
whales like were
adopters.
forged in the fire of like the early ICO and the negative 99% and all that stuff, and they developed like such a conviction and love for the chain, right, and everything on it, that they're sort of naturally attached to it. It'd be weird to be somebody who made like $100 million in Ethereum. You've devoted your life to it, and then you just go buy like an NFT on Polkadot. Like it doesn't
that's a good
make
point.
same sense to you as it might make some newbie.
It's a
who just
bit of
might come in.
it's a bit of a chicken or egg though, because it could just be that the marketplace itself is what could bring some of these whales. So like if you see like say one of these games just start to rip on AVAX or on one of these other chains, and people generally want to get involved, they're going to have to own the coin. And once they own the coin, they're going to have to either they're either going to onboard with fiat, or more likely they're swapping their Ethereum for it. And so over time, you could find that these ecosystems build up, and it might be the other way around. Whereas like Ethereum, it was a surprise for NFTs to even exist, right? Like even Vitalik famously talks about this, like it was the biggest surprise for him that NFTs were an evolution of the blockchain. He didn't see that in his vision at all for smart contracts. So if someone else comes around, and not someone else, but if one of these other blockchains comes around and develops something really useful or really exciting, or finds a way, and it might not be influencers, it might be something else, but I think you'll see a flock of people moving over. And if there's enough of them, then yeah, you have an entirely new ecosystem, which again, everything we always talk about, by the way, constantly seems to drive toward this like multi-chain future. We never really go down a path of discussion where we're like, yeah, no, that won't work out. Like clearly this is a one chain future forever. Like there's no way in which that makes sense to me. It just continues to seem more and more likely that because of NFTs, and you know, I was going to drive at this question as well, as like for a lot of people that don't want to necessarily like play all these games and own all these NFTs, if you're an investor and you're listening and you're short on time, like how do you get involved? And I think what we're also finding is that another trend we're going to see this year is that what was a rare occurrence last year, which was for NFTs to issue their own coins, like a regular ERC20 coin, I think is going to be a standard thing going forward. The first one that will probably propel that is going to be Bored Ape Yacht Club. And when they issue their token, it's going to be huge. And then I think that's going to just sort of make it a no-brainer for every single one of these to do that. And that'll give a lot of investors the opportunity to, because they're either late or because they don't care about the NFT, to participate in the rewards of the ecosystem.
Don't you think that if we zoom out like really far into the future, that NFTs more than any other asset are going to end up sort of being like chain agnostic? Like coins are really, and this is becoming less of a trend, but a lot of coins are sort of like inextricably tied to a particular chain, and projects go multi-chain, but they're kind of souls in a particular chain. It just seems like in the future, like a lot of this stuff is going to be like abstracted away from users anyway. And a lot of NFT users already really don't care about the chain anyway. They just kind of care about the NFT, and some of that is sort of tied to the chain, right? Right now, like obviously,
I couldn't agree with you
that
more.
are launched on Ethereum have that like legitimacy attached to them, but we already have projects like apps like you familiar with like what is it, Vivi? Have you seen that? Vivi is like sort of like it's like an app first more than it is like a crypto thing. Like you can trade, and you can trade like real like branded NFTs like Marvel and Disney and stuff like that, and it's done in the app. And I think they're now moving to Ethereum or some EVM kind of based thing from there. But it really started off, I think, like as like a app kind of user first experience, as opposed to the shitty user experience that like buying a mutant ape for the first time is for somebody who's like never really used crypto before.
Right.
And And we're seeing like Engine, for example, right? They're trying to launch the Affinity parachain. Like, have you seen this? Like, I'm really curious how that ends up panning out, right? Because they're trying to win a parachain auction, and then kind of build this entire like blockchain / marketplace for NFTs that's very focused around kind of integrating a lot of the things that are sucky about the NFT experience into the sort of functionality of that chain. There's going to be like interesting features, like they're going to use token incentives, I think, to incentivize people to like bid on NFTs, for example, even if they don't necessarily want to buy it. They'll throw out like some price where they would buy it. And like the closer the NFT sells to the price you bid, like you get like reward tokens. So you sort of get, I may have butchered that a little bit, but the idea is you're sort of incentivizing people to provide like price discovery and liquidity in a way that's like built into the protocol and the exchange. And we're also going to see like the launch of was a Lu Art, I think, which is the marketplace on Luna. And that should be interesting too, because Luna's got like its own sort of community that I think doesn't intersect as much with the Ethereum community. And that entire chain is really built like kind of just straight up like a fintech app almost from the get-go, and sort of like unabashedly so. But you're going to have like the speed and the ultra cheap transactions, and it'll be interesting to see what happens with NFTs when you can trade $5-10 NFTs, and that's like that's fine, right? That's not even like economically viable on Ethereum mainnet right now, so it doesn't exist at all.
Do you think the fact that gas fees are expensive creates some kind of like artificial price floor on all the NFTs on Ethereum? Because
we've talked about this before. It's like a step function, right? So either your project meets the step, right, where it's worth paying that gas and the royalties and like the cost of it, right? Or if it's below the step, it just dies, right? But some of these projects might exist as $5 NFTs, and that might be totally fine. Like the real world is full of collectibles that are sub $20. That's like not an abnormal thing at all.
That does match the more of the real world. Like I was thinking, if the floor, the gas fees are so low, will these kind of just hover in the like $10 to $20 range, and you never see any kind of like ridiculous price appreciation. But in reality, there is a bunch of collectibles and baseball cards and all kinds of the sort that are, just fun to collect. And, you might turn $50 into $200. But nothing, kind of orders of magnitude.
But the supply demand curve is all messed up, right? You can't have this like smooth kind of line. It's just a line, and then it steps and just drops off to nothing. You have these very strange, I'm trying to think of like a market that's ever existed in the world where you have this dynamic where there's this like insane demand, but the market can't deliver something within this particular price range, and you only can get this like uber expensive thing, right? But normally you have like this adoption curve where you launch these ultra luxury goods and just only rich people buy them, right? And then it kind of drifts downstream and you get mass adoption. But there's people who have no business spending like $1,000 on like any real world good, just doing it in NFTs. Like it's like it's nothing, right? And I'm trying to, like the closest equivalent I could even come to is maybe like bottle service or something. You should go out and see people drop like $300, and you're like, you shouldn't be doing that, but it was just a thing people did that made sense. That was sort of like economically irrational. But NFTs is that like times 10, right? There are people spending a lot of money on these things that like if it was just a real world good, they would never even probably cross their mind to do that. So I'm like,
it's only 0.1 ETH.
Like something that's analogous, Yeah. I mean, you're not wrong. Like when I looked at Chicken Game, things felt kind of expensive, and I was like, oh wait, 15 AVAX? That's only like 0.3 ETH. Like that's actually it's actually pretty cheap. Like that whole unit bias thing is like is real.
I'm curious about your point about Luna. It's got more total value locked than Solana, about 50% more. And all the activity there is like, I feel very DeFi focused, very based on the yield that you can get from UST. So can this like very yield focused community transition to this culture, community, creative art thing, or maybe they'll create something completely different, that is unique to their own community. But it'll be just interesting to see if a bunch of yield focused people can get into it and start building creative stuff other than innovative programmable money stuff.
I don't really get the vibe that the lunatics are like a very left brain, like yield focused people.
Really?
They seem just as degen as any other community.
I like my 20% yield, so that's why I'm
Anchor.
It's one of the great questions of our time, right? Like, is Terra just like a unbelievable Ponzi that's doomed to collapse in a fiery ball of death, or is it like something that's truly revolutionary?
So Luna or UST is an algorithmically created stable coin. So it uses some kind of algorithm to peg the stable coin to the dollar. There isn't money backing it. So with, let's say, USDC, there's actual US dollars for the most part, backing one for every one USDC. The US dollar used to be kind of backed with gold, say. And there isn't that. It's algorithmically pegged and using Luna as like a counterweight, I guess, to, keep it at its peg. But it's really held by the community's belief that each of those has value, right? There really is nothing, no real backed value holding it together. It's just like, what do we build as a community? What do we think is going to be true? And those two narratives, like, keep this $20 billion ecosystem, running fairly smoothly.
It's like the Spider-Man meme, right? We're all pointing at each other because like Luna's like, I'm worth something because you're $1. I can be exchanged for you, and UST's like, I'm worth something because you're worth money and I can be exchanged for you. And then you're like, okay, but why is Luna worth something? Why won't this just dump reflexively down to zero? And it does seem like intuitive to me that like there could be some point where there's like if the Luna token, for example, was like Ethereum, right? And then there was just trillions in economic activity happening on it, right? Just by itself. And then the market cap of UST was like $1 billion. You'd be like, that makes sense. Like this stable coin is like interchange for this token that has like this like gigantic chunk of economic utility, right? But right now, Terra is basically just this blockchain that is effectively just a UST anchor sort of like Ponzi game, right?
Yeah, so
built on the promise of a lot of future. So the question is like, when do you sort of like cross that line? Like, when is there enough economic utility in Luna inherent that like that token has some inherent value where like you can trade it for this like stable coin and they can kind of be interchanged and it like sort of like makes sense versus like when is it something that's like an inevitable death spiral to zero, right? And then we have these other factors at play as well. Like we'd be fools to think that like there aren't some like Luna whales who are like willing to support the price of like UST even if like it doesn't want to be there, right? Because if it does depeg, their bags go very, very low very quickly, right? But as an investor, that could be a logical reason to buy it, right? You're like, well, these guys like that is like an investment thesis, right? If you think that was like Doge, right? And you're like, oh, it's like the world's richest man is backstopping the coin. I mean, that's kind of an investment thesis. Like, it's like,
Can I jump in here on Luna in particular? I think
absolutely not.
My big point is not necessarily regarding Luna, but I think Luna is an example of it. My big point is kind of like, I think 2022 or maybe 23, like at some point we're going to have an intersection of DeFi and real world use. Like right now, like everything in crypto is pretty much siloed in the internet. But like at some point, we're going to be able to use internet money as money to exchange for things in our actual lives. And I think UST, the stablecoin on the Terra blockchain, is probably the most widely used stablecoin in real life now. I think they're using it in South Korea. And like maybe that is it's almost the inverse of what you're saying. You were saying like, well, we need Luna to be worth something for UST to be worth something. Maybe it's the opposite. Maybe UST is worth something in real life, and that makes Luna then worth something because we're actually using the stable coin as money. Whereas like all other stables are just like internet one. I
think you're right.
I'd probably push back on that. I mean, I think it's an interesting philosophical question. Like, can you create demand for a stable coin and then the stable coin gives the thing backing it value? Because that's like, obviously we normally think of it as like the stable coin has value because it's backed by this thing that has value. Otherwise, why isn't it just like a meme? Why
sure,
does it have
but don't get lost in the weeds. I did want to talk more about the intersection of DeFi and reality and just use Luna as an example of where that's actually being used today. But like, I actually think that the bigger question is like, at what point does DeFi become a part of our world? And like, I think Maker on Ethereum is maybe one of the first examples of crypto entering sort of like mainstream finance.
And was that, was that the example?
Vitalik today? Well, it wasn't today. It was a couple days ago.
Did you say Vitalik?
Vitalik.
Oh, okay.
Vitalik?
Yeah, I don't know. It gives him like energy or something. Vitalik.
That sounds more like a penis pill, to be honest.
Have I always said his name like that? You got me thinking now. Well, he was talking about how he went to Argentina, and did you guys hear this?
No.
Yeah. So do you know what the number one thing people in Argentina use to exchange value, send value to one another?
They have a peso. They have an Argentinian
black market peso though.
It's crypto. Really? Number one crypto thing they use. Okay. What is it?
I don't know.
Some kind of stable coin.
Yeah.
Close. You know what they use? They use Binance. Not the chain, the exchange. They have Binance accounts and they just send each other money. And it's instantaneous because it's a centralized database. And they're just like, this is great. We get the utility we want. We trust Binance more than we trust the government. And it's not Binance chain. It's Binance, the exchange. They have like Binance exchange accounts. And they're just like sending money to their usernames.
Well, I guess that's not that crazy.
For them,
we send centralized money all the time.
Works.
Like we send centralized money back and forth all like with our, like that's how we exchange money now.
Right. So it like Venmo, totally makes sense if you break it down. They're like, they don't need like decentralization. They just need something that's way better than the existing system, and then they will use it. And that's
their Venmo.
It. End of story.
Eric, were you talking about maybe stable coins like entering as a way for payment and just kind of infiltrating, or were you more talking about like traditional banks may get more involved with DeFi? Because I think we saw, in the Maker DAO, there was a proposal from a bank, and I forget the exact proposal, but it was something of the effect of like, can we use this as collateral to take out a loan? And that was the first time like a bank went into a DAO and like put a thoughtful business proposal forward, and it's up to the vote for the community to decide if they want to accept whatever they're proposing as collateral.
It was like
Is that what you're talking about?
SocGen, Société Générale, or whatever, like the big French bank was getting involved with Maker. It was like using DeFi in reality. That was kind of towards my point. I mean, both to answer your question, yes, it's both. It's like, can we use stable coins to pay for real life things? That's my question. And also like, at what point do like DeFi yields come into play in like reality? Basically just using like crypto rails on like actual TradFi stuff.
I mean, this is something I think we should definitely talk about more and get out there, because I think this is like a missing narrative in what crypto brings, which is that stable coins is probably the most innovative thing in crypto that doesn't get talked about because, well, it doesn't go up in value, but it can be one of the greatest investments. Like, Stephen, you were mentioning earlier, it's programmable money, and we don't really have that now. There's going to be features of money that have never existed before. Like they're already in, there's going to be this can be a two-sided coin in the future, specifically when it comes to how governments use stablecoin. But the good side is it could be very easy to send stuff back and forth. There could be much more yield opportunities, obviously, in decentralized protocols. But there's going to be the other side too, that which we should talk about, is where it becomes more trackable. It becomes easy to monitor how people are spending, where they're spending. You can maybe issue a token that says you can only spend this on pizza, or you can only use this on baby diapers and baby formula. And there's going to be all this like programmable information in money that we've never had before. There's going to be money where, let's say, if they want stimulus in some area of the economy, in some geography, it's going to disappear within 6 hours. I mean, there's going to be stuff that we haven't even thought of. It's going to be mind-bending to us. And I think you're going to mostly see China do it later on. We don't have to get into this right now, but like with their digital yuan, they're going to use all the powers that they can imagine to kind of like pull the strings on like a centrally directed economy and utilize it as much as possible. But, in general, stable coins are for even people who think crypto is a scam and, don't believe in Bitcoin, don't believe in all the BS and applications and NFTs, because it offers you an area to achieve a return that's higher than inflation, which you can't get in a savings account now. And so that's... This is the headline.
Yeah. It's way higher
so
than inflation.
when people ask me, like Nick, you said, like when people ask you about crypto, how to get started, like, and they say they don't own any Bitcoin or Ethereum, I actually tell them to just literally buy stable coins. And I'm like, that's your first exposure. Your first exposure is you not losing money, and that cash that you hold, like, don't bleed against inflation. In fact, like, get this 9-10% basic level 1 return right now, immediately.
Even on a centralized exchange like BlockFi or something,
like BlockFi or Gemini or Celsius or any of those.
You get 8% on a dollar, and that's like way like in terms of an efficient frontier in traditional finance. You'd say like, oh well, like for a dollar you should get negative 6% return because of inflation. Like we actually get positive 8% in crypto. Like that's way above the efficient frontier. So it's like it's an incredible investment.
I think it's important.
Here's a question for you. Like, why, in a world where if you know what you're doing, you can, like, right now you can easily earn 15% on stables and DeFi, right? Like that's like easy if you have like some baseline knowledge.
If you're the DeFi lord.
Why is there a reason to buy stocks? Like if you can own crypto cash with a 15% yield attached to it, like what
most stocks, no, but the higher end of the risk curve, maybe. Like, I mean,
the S&P went up by like 29% this year, so like, that's better than your 9% on stables or whatever. So like you're definitely taking risk, but you're getting a higher return. So
if I try to take a beginner mind to it,
but do you think 29% is at all like expected value?
Oh hell no! It's much lower in terms of like a risk adjusted return. That's
because you could lose half of your value in Tesla easily.
Of course, like growth stocks are down 40% over the last like 4 weeks. Of course, getting a 9% versus no risk.
15% programmed in. That's incredible. So like for the right. Most people, I would say there's no reason that they would even be messing around with stocks anymore when they see that.
It's just a learning curve issue. But like as you said, Armand, like you can do this in Gemini and still get, what is it, 8 or 9 or 10?
That's all you need, though. You just need a taste, and then you learn that this is a centralized exchange because you have a conversation like this, or you listen to this and you go, oh, okay, I've been holding my stablecoin at a centralized exchange. I didn't even realize that. I didn't even know that. Well, what does that look like in a decentralized finance world? Oh, I can get a minimum of 15%. And then once you wet the whistle and you get going, it's like you can do a lot. And I think that's like one of the best gateway drugs to crypto for sure. For most people.
I totally agree. And I think our next leg up in like crypto broadly, meaning like the next bull run, is going to be where real life intersects with crypto, where we see integration and adoption of crypto into sort of like mainstream functions. I think that's what it's going to take.
I think the question we should try to answer is, when you compare like a 26% return in the stock market versus yielding, say, 20% in stable coins, is where does that yield come from? Because whenever I talk to someone, they're like, that sounds, what do you mean? How is it yielding that? Where is that coming from? How is that even possible? And so, maybe I'll start with like a few places to start, and you guys can kind of maybe fill in the gaps. But like, with decentralized,
turn on your video, by the way. Turn on
my
your
video not on. Oh, okay.
Yeah.
All right.
I want to see your face
I
as
don't
you
like
explain
seeing
this
my
to me.
face while I'm talking.
There
It's
we
weird. So, with a bank, they have margins. Eric?
Well, we're having
Eric's
some
muted.
technical difficulties.
Eric, I think you're muted.
Eric, we lost your audio.
Can't hear you.
Yeah.
Oh, I'm sorry.
Nope.
No, I was like coughing.
Just keep doing your rant while he fixes this thing.
Sorry. No, all I was saying, I was just like edifying. I was thinking like, this is such a great conversation topic. It's like what the people that I interact with are always asking. It's like, okay, so you got higher yields, but like where's it coming from? How real is it? Like what are these yields? I think this conversation is going to be really important.
Yeah, and
Yes.
like I don't have like a succinct answer for it, but the easiest one to me is, a bank's lending companies, they have a margin, right? And so when you look at a decentralized protocol, there isn't that middleman to take that margin. So essentially that margin goes to the participants in the network, the people lending money or maybe the people borrowing money. But maybe, another way to look at it, because some of these centralized companies still provide a good yield, like BlockFi, Nexo, Celsius, there's a bunch of them. And I think the question is like, where does this yield come from? And the main areas where like I see the yield come from is obviously like in lending, you get the interest gets paid to the lender. Sometimes there's incentive rewards where a protocol will incentivize people to make a deposit. Like in the case of Anchor, they'll provide some kind of token reward. And obviously you're not getting a yield in a stablecoin, you're getting in another token, but there is that incentive to deposit money in there. And then there's liquidity fees, for providing liquidity. Sometimes you can, I think the most popular stablecoin pool is on Curve with 3 stablecoins, and you're basically providing, some liquidity there, and you get some liquidity fees. So Steven, I think you dropped off, but I basically just listed lending rates, rewards, like incentivized rewards, and liquidity fees as 3 ways that stablecoins actually get their yield. So I don't know, I'd be curious, like if there's any other gaps that we're missing on where these stablecoins, why am I able to generate a 20% yield?
Well, I just dropped off for a little bit, so I missed some of what you were saying, but
Can you hear us now, Steven?
I can hear you now. You're good.
Okay.
Yeah. So were you saying like, where does the yield come from?
Yeah, and it would be so helpful if like there was a graph that just showed like, okay, this much came from LP fees, this much came from borrowing and lending, this much came from issuance, like where you could just like stack it up and be like, here's the 20%, here's where it came from. Like, I think that would help a lot of people.
Well, when you're in DeFi, right, and you're earning some 15, 20% yield in DeFi, I would say typically 75, 80% of that yield comes from token incentives. And the other, 20, 30% or whatever it is comes from trading fees. And that could be higher or lower depending on the specific protocol. Because if you're a protocol and you're trying to incentivize user adoption, what you're doing is you're giving away free tokens to get people to put liquidity in a pool. Because if you are, say, an exchange and your pool doesn't have any liquidity, well, your protocol may as well not exist, right? So it's very important to incentivize user adoption via giving away these tokens. This is like the essence of when we talk about DeFi farming. So if you're a brand new protocol, like 98% of your yield may come from token incentives. But if you're like Curve, like a huge chunk of that yield may come from trading fees, right?
Yep.
Now, both of those things are sustainable. Like it's not a scam, right? Like you can think of it as like in people just need to grasp their head around this like concept that in like DeFi, protocols give users free equity. It's just like a thing that happens in DeFi. It's just proven to be a good and viable business model. The people who use your protocol, you give tokens. That's how you build a community. and it works really, really well. So once you kind of wrap your head around the idea that that's a thing that happens in crypto land, and it's a beautiful thing, the idea that you could just be an early adopter, a user, put no money down and just like get ownership of the thing you use, it's great, right? It's the essence of what we sometimes throw around as Web3. So once you accept that and you realize that that's not necessarily like a Ponzi game, right? It's just the equivalent to like some stock company, like, you know, diluting shares and giving some incentives out to people. That wouldn't necessarily destroy the entire company. Like if Apple just did like some dilution where they did 0.1% of their stock, they just started giving out to people who like used Apple like they wouldn't like destroy Apple, right? And in the web world, that can incentivize growth, right? That can incentivize users, and then the users coming in can add value to the protocol beyond what you're giving away in terms of like printing tokens, right? So when we talk about DeFi farming and like farming interest rates on stablecoins, we talk about getting a 15, 20, 25% yield on our stablecoins. What we're mostly doing is getting rewarded for being early in a protocol, taking on some small amount of risk, and like providing value to the ecosystem. And then when we're getting part of that yield from the trading fees, well, that part is easy to wrap your head around. Like if somebody wants to swap USDC for DAI, somebody has to be in the middle there providing that liquidity, and it's reasonable for them to take like a 0.3% or a 0.1% or a 0.05%, depending on what platform you're using, fee to do that. You know, that's where fees come from, and it's not a scam when we're talking about 15, 20% yields, and we could talk about, you know, 17,000% yields. Right. That's like a bit of a different story.
I think on the CeFi side, meaning the centralized finance side, I think it's a little more obvious. Even it's more
it's just lending, right?
Yeah, it's more lending, like akin to what's happening at your Charles Schwab's or whatever. It's like somebody's borrowing from another person to short or to take on additional long exposure, and then, you know, they're also like the CeFi companies are also excited that you're going to take on leverage to do more trades. So you get extra trading revenue plus the borrow. So I think that's a simpler model to understand.
Yeah. Although in the case of Celsius, right, that was more complex, because what Celsius was doing in the background was actually taking your money and using DeFi and then just like giving like a smaller amount to your users. And when they got like hacked in the Badger hack, right, they were like, oops. Have you not thought about this? Bitcoin is gone.
Steven, have you not thought about this? I've thought about it in TradFi. I've thought about like, why don't I just onboard clients and issue them like a risk-free rate of like 5% when I can generate a risk-free rate of 9% and just arb that, you know? Like
well, there are protocols that are doing this, right? Like when you see protocols like Barnbridge and Saffron Finance and Rari Capital all come to mind, right? They're building out infrastructure that would basically allow institutional money to come in and lock in like a 2% rate, which to them is like insane, right? That's massive in a money market world where you're getting like zero, right? And the protocol is basically tranching out the yield. So you can go into the B tranche and you can make 20% because the institutions are giving all of the upside to you. But in the event that like a hack or some exploit happens, you cover the ass of the people in the A tranche, right? So they lock in that guaranteed, 1-2% rate.
It's a brilliant model.
More of that
completely exists.
Yeah, we're gonna see more of that kind of happen as like more institutional money flows into DeFi, and I think that we are very close to having like a ton of institutional money flow into DeFi. I mean, the returns are just like way too good relative to the risk profile, and that's not to say that there's no risk in DeFi, right? But if you know what you're doing, like you can use abracadabra and you can put UST in the degen box and you can earn like 100% yield on your UST. Now, is that a risk-free strategy? No, absolutely not. But is the risk like worthy of 100% interest? Yes, absolutely. And it's not even close.
And it makes me think of something that you said probably like 2 years ago, Stephen, when we were like having cigars at Churchill. You said like, what happens to stock market multiples when the institutions finally get on board with this and they see that they can get much higher yields in DeFi, and then they'll just exit the stock market entirely? What happens to our multiples? Like, trading at nearly all-time high market multiples in the stock market. Like these things are ripe to correct.
Yeah, like why would like I've seen like Drunken Miller talk. Drunken Miller's talked about how like the real forward yield of the stock market is negative. Why would you put money into a real negative yielding asset that has a lot of volatility when you could just put it in crypto cash that has a effectively guaranteed interest rate aside from some smart contract risk, which if you really want to, you can hedge out if you're using premium protocols and still be like well ahead of like the rate of muni bonds or junk bonds or anything else in the real world. It just doesn't make any sense. And it just seems like a gigantic market inefficiency that's going to initially get arbed away. And it's going to get arbed away by this huge ball of money coming from the quote unquote real finance world Ponzi, going into DeFi instead of stocks.
This DeFi Ponzi is going to just swallow like the traditional world. It's like it has to. Like
this conversation is making me feel like I need to get out of all the rest of my remaining stock portfolio. It's like,
or even like your money in your checking account. It's like, why would I keep?
Oh, that's the easy low hanging fruit.
Well, I keep $0 in my checking account at all times, and it's like,
let's be honest, we're
frantic at the end of the month. I gotta move like money around, but like it's very hard for me to keep like $10,000, $20,000 or whatever in my checking account to like cover like my my mortgage and all these expenses. When I'm like the opportunity cost of that for me might be like $4,000 a year. Well, that's like $300 a month. Like I don't want to light $300 a month on fire. I'll keep it all in DeFi to like maximize like the interest. And it's just like once you take like the pill, the red pill, you just can't go back.
Yeah, you can't let any of it go.
Normie world.
Yeah, it's funny because like you get those like Ponzi scheme labels for stablecoin yields, and the traditional banking system is like a fractional reserve system, right? So like for every dollar or that in a bank account, a bank can lend out $10 to and they make extreme margins, and that doesn't exist in programmable money world or DeFi, where it can exist, but for the most part it's all collateralized or maybe even mostly over collateralized loans. So like when you compare the fact that it's not a fractional reserve system, it maybe has a lower risk in that respect, but kind of funny when you think about banks are
how everything is a Ponzi. Everything is a Ponzi. The stock market's a Ponzi because if I buy Apple stock, I literally am required to sell it to somebody at a higher price as well. Like I have to sell it to somebody at a higher price to make any money. Like everything's a fucking Ponzi at the end of the day. It's what I kind of realized getting into this crypto stuff.
When rates go to zero, the line gets very blurry for sure, because you're just discounting cash flows out to infinity, and well, you can any logic is possible at that point, Armand,
so
what were you trying to say?
Yeah, for the person who, is like, okay, I want that 15% yield, and that's where I want to dip my toe in. Like maybe they're like, I can do the BlockFi thing. I'm actually ready for the, first level DeFi thing. What is the current January 4th, 2022 like recommended lowest risk protocol in the DeFi space for doing that?
So I think now we're starting to get a lot of apps built. We're starting to get this quote unquote DeFi mullet thing like really coming into existence, where you got fintech in the front and you're using DeFi in the back and you don't know it, right? Because we've got like two wallets that come to mind now are Argent and Dharma, right? Now, Argent, I think, like from what I've seen, like may even have like a much better kind of user interface and experience than Dharma, which I've kind of been like a big fan of for like onboarding normies into crypto, because I think like you've said, like the killer app is the yields on the stables, right? You can have somebody start using crypto without taking on, I don't want to say any risk, but there's less risk in like using Curve and farming interest than there is in like holding Ethereum, right? So much volatility in the price of Ethereum. So a user now can use a wallet like Argent or Dharma, right? Which to them are just apps that you download in the App Store. And from those apps, right, you can just connect your bank account like you do with any other app. And within the app, like you can click like an earn interest tab, right? And then that app is just using a protocol like Aave or Yearn or Curve, right? And they're just doing all of that stuff for you in the background. Like they're staking your coins and doing it all. And they're abstracting away all of that complexity, and you're earning interest, right? So somebody who's like really green and doesn't know how to use an Ethereum wallet, who doesn't know how to like connect their wallet to websites and kind of, you know, do the transactions and all that, like using one of these like iPhone apps that's kind of abstracting away a lot of this complexity, that might be a great like first step. Here, just download this app, just buy some crypto from your bank account directly, but you're not really buying crypto exactly, you're just buying stable coins, right? Now just click this button and now you're earning 14%, right? And I think once people do that, they go like, oh my God, aha, the light bulb goes on, right? And what's critical though is for like in Dharma, for example, you can onboard directly to Polygon, right? And I know that Argent uses, I think they use like ZK Sync to do swaps and everything. So you can trade Ethereum and pay like a penny instead of like $160 to whatever it would cost you on mainnet, right? So we're now onboarding users directly into layer 2 via this application layer, and people are getting an experience that's more akin to the normal experience they're just used to getting with their normal apps, right? That to me is like step one. Like if you don't know what you're doing at all, download one of those apps and just do the kind of hand-holding abstraction thing that they do for you. But once you're like, okay, I want to play around a little bit, I want to go out into the, you know, the scary, you know, Wild West and just kind of, you know, see what's going on and experiment. Number one thing I always tell to people is to like not use mainnet Ethereum. Like just stay away from it if you can, right? And you can do that with something like Dharma, because you can just withdraw directly. You can buy and withdraw directly to Polygon. And Polygon, for people who don't know, is like sort of like a hybrid layer 2 / sidechain on a, you know, built kind of like alongside / on Ethereum, where you can do all the stuff you would do on Ethereum but pay like a fraction of a penny, right? So let's assume you're on Polygon, right? The main basic thing you would do on Polygon is to use Aave, right? Aave is like your kind of very OG lending borrowing platform. So you could take some stable coins, you just stake them in Aave. You probably earn like 6 or 7% right now on like USDC or USDT or DAI. And that goes up and down a lot. I've seen it as high as like 30, you know, when stuff gets like really crazy. But that's it. You're done and you're earning some interest. But if you want to get like a little crazier, you want to earn like 15%, right? Then you can kind of graduate a little bit. And then I think the step up from Aave is to use Curve. And Curve is like super, super safe, right? In my humble opinion, not financial advice. But Curve is like the largest DeFi protocol. I mean, there's something like $24 billion secured in Curve right now. So if you put your money in Curve, like Curve isn't going to lose your money. Like you will lose your money doing something with your wallet before Curve loses your money. But in Curve right now, you could probably earn, I would say probably like 14, 15% on Polygon. And that's like a really nice interest rate. But the complexity is deeper. You have to like take your coins and you have to put it into a liquidity pool. And then you have to take your liquidity pool token and then you have to stake it in like the gauge where you farm the token. And now you're earning like Curve and you're earning like trading fees. And now this is already like really complex for people because your yield is broken down into two places. One is the trading fees, which you're accumulating into the pool and you don't really even see them. And then the other yield is like in these Curve tokens that you're sort of earning on the side. But then you get to decide what to do with them. Do you keep them? Do you immediately sell them for cash and then like put more cash back into the pool? You know, this is like the maintenance thing. But you could of course use like, you know, a yield aggregator, which kind of automates this process for you. You know, you could go on Polygon, you can use like an Adamant Finance, which is probably too complicated for a newbie. So you probably use something like a Beefy. You know, Beefy Finance is pretty good. And that will basically like automatically like harvest your rewards and sell them and redeposit them in the pool. So you kind of put your stable coins in there and you set it and forget it. And now you're earning like 15%. Now, if you want to go like another layer deeper, now you're probably doing something with, you know, a protocol like My Finance, you know, QiDao. And that's sort of like a fork of MakerDAO on like the other chains, because MakerDAO has decided they're just going to stay on Ethereum, so it opened up the market for somebody like Qi to come in and deploy on Avalanche. They've deployed on Polygon. They've deployed on Phantom. Now, if you're just only starting with stablecoins, the only thing you can really do with Mai is to pool in like the like Mai has its own stablecoin called Mai or Mimatic, depending on where you're looking at it, right? But that pool that's basically a stable coin, but it's sort of complicated. Now things are getting tricky. It's not really pegged to $1. It mostly trades like below $1 because there's a redemption fee and there's just all of this complexity that gets kind of built into it. But if you take like, you know, $5,000 of USDC, you sell half of it for Mai, now you have 2,500 Mai, and you have 2,500 USDC. Well, now you can stake that in a pool in QuickSwap, the main exchange on Polygon. You can take that, you can stake that token in Mai, and now you've got like 22, 23, 24, 25%, which is a really hefty yield. But you got to be aware of other things. There's like a deposit fee, for example. So if you pull your money out, they charge you 0.5%. So if you do that as a one-day trade, you lose a bunch of money, right? It's not meant to be like a one-day trade. But if you put it in,
have you ever actually done any of this before yourself? I'm just curious. the DeFi Lord, ladies and gentlemen.
kidding?
The DeFi Lord.
I feel like I've gone too far off the rails.
No, so
I was trying to keep it as simple as possible.
No, it's actually perfect because
as I say it out loud, I realize that what I think is like a level 3 strategy is like still kind of crazy.
No, so Stephen, let me just quickly summarize and I'll tell you what I learned. So level 1, I think what's really important for people that want to, you know, what is the purpose of all of that? The purpose is I want to make more off of my cash, and I'm going to convert that into stablecoin. This has nothing to do with crypto. I'm going to take the cash I have, and I'm going to get one of these apps from the App Store, like Dharma, DHARMA, or Argent, ARGENT, and I'm going to onboard myself into the crypto world by simply connecting my bank account and earning some yield by converting those dollars, those fiat dollars, into something like USDC or USDT, and boom, I'm getting my yield, and everything is happening behind the scenes for me. Then when I get some pep in my step and I get a little more confidence and I'm like, I don't need this software front end in my app. I want to do this from my desktop. I want to get involved in DeFi. I could go directly to something like Curve or Aave. And Curve sounds like the most, you know, safest and where I'm going to get the best yield right now. I would go and I would facilitate this all directly. And then level 3, you would go back to everything Steven just said for the last 10 minutes. You would rewind it and you would re-listen to it over and over and over again until you get it, and you would just do it, and that's how you would learn it and get it. So you can clip that for later, you little degents.
We'll get to level 10.
And that wasn't even exactly. But that's the beauty of this, right? It's like, you yourself had to start in a similar manner, but the difference is that none of the technology none of the software on the front end that exists today existed then, and the risk was probably exponentially higher. So like, what a great time to start to learn. It always gets easier. You know, it's just like starting a website. It's the same idea. These things are akin to one another. It's like starting a website for us 10 years ago was a huge, brutal process. Now it's drag and drop on Squarespace and Wix and things like that. So the front end is only going to get easier and easier, and the whole process is going to get safer and safer. So that's, I think, a great exposure for anybody to just start to get involved. And then, as you said, they can go, yeah, I'm going to use the Polygon network. I'm going to get some Ethereum. They get some Ethereum, and then they start playing with NFTs, and then the rest is history.
I do think this is like a beautiful thing, because, you know, all the things that Steven mentioned, they actually exist in the traditional finance system, but individual players can't participate in them because they're behind this curtain that you have to have all these licenses and charters, and you have to have, billions of dollars in to play in. But, market making is a business that exists today. And there's all these regulations and rules and a bunch of money you need to have and relationships you need to have. And now you can go in and do it in a decentralized protocol and do it with $50 if you want to. Obviously made on mainnet, but elsewhere you can. And that's, a beautiful thing. Lending, again, all these charters and certifications and money and relationships you need to have, you can now provide lending and evaluate the risk on your own. And so it's going to be really interesting for people to see that these businesses and additional personal finance tools are now available to them. And it's going to be, kind of awkward because you do have to take personal accountability for yourself. You have to be able to assess risk. You have to understand the risk that you're taking, and you have to manage it. And there is some maintenance to do, but people having more power and control over their finances, I think amongst this crowd, we think is a good thing. I think amongst regulators, they think that's a terrible thing, and you're not, you shouldn't be allowed to walk down the street with a nanny watching over you.
They just haven't been purple pilled yet. They'll get there.
Well, we would call it. We would call it freedom. Like that.
Right.
That is financial freedom is freedom.
Yeah.
Like that.
Yeah. Yeah. And one other amazing benefit, by the way, that we haven't even talked about today, and we should do a whole discussion on in general at some point, is once you start actually playing in the space, you realize that there are all these other rewards that you were never promised, but you earn as a result of just generally using the protocol. So for example, if you go into an app like Argent, or you start to play with layer 2 protocols like ZK Sync, it's almost guaranteed that ZK Sync is going to have a token one day. If sometime this year, let's just say. And so utilizing that and actually beginning to play with these different layer 2 solutions, you wake up one day and you get an airdrop, as we call them, for something that could be worth anywhere from $100 to $10,000 or more in some cases with some of these prior airdrops. And that is yeah, exactly. And I think the biggest one ever was DYDX, right? It all depends on your usage and how they are allocating the airdrop in general, and everybody's doing it differently. But the point is it pays to play, and it's a fun thing, and these are all auxiliary benefits.
We should have a stablecoin section every time just to remind people how innovative this is and how there really is some alpha just in some, you can achieve higher than normal benchmarks. You can have good risk adjusted return. You can get paid, while you do it, earn rewards. You can learn, you can gain, financial freedom with it. And so for every, degen, Ponzi, wolf game we talk about, it's also good to kind of talk about these opportunities just as much.
I don't know how much it helps to go over this stuff, but I thought it was interesting when Steven started going through the how to generate stablecoin yield. It just reminded me of so many other crypto strategies that exist. And it's if that's helpful, there's we could do how to on collateralized lending. You can do how to on options and derivatives protocols, LP strategies, yield aggregation, synthetic assets, et cetera, et cetera, et cetera. You can keep on going down deeper and deeper into it. It's just, I think it's how much is too much for the listeners' mouths. You get your mouths wide open. How much do you want?
It's hard in the audio format for sure. It's because we didn't even go into some of the complex strategies, because if you get really advanced, you can, instead of just staking stables somewhere, right? You can have ETH, and then you can use ETH as collateral in all these strange imaginary but not imaginary ways where you are sort of borrowing money, getting more money, and you can kind of go 4 layers down the chain and create these super complicated positions where at each point in the chain you're generating some yield, and you end up with a 30 or 40% yield on your base Ethereum, which is crazy, right? But anything you do that has that high of a yield on Ethereum is typically short-lived and requires a lot of maintenance, and it becomes a question of how much time do you have to dedicate to this? This is why I think that some of the protocols that exist out there, like Stake DAO, right, may kind of gain like more and more market share because they allow somebody who's like, oh, I'm kind of like into this, I want to use this, but I don't want to manage it. You just hand them, just stake your USDC there, and you just make like 17%, and you call it a day. You have to trust that protocol a little bit, but it abstracts away a lot of the complexity for you. Or like using like a ribbon finance, for your ETH. It's like
that's a great one.
Or a Premia, right? Premia is like a similar, it's in options, but you're more on the, I guess they're sort of similar, but like slightly different implementations. But like Premia has had like 3-digit yields on ETH for a while now because there's huge token incentives in addition to the money you're making writing the call. So it's like the opportunities out there like endless. It's just like whenever you start dipping into the double-digit returns on your ETH, you're typically in something that's going to come back down to earth in the next like month or so.
Right. And I think like
find the next double-digit thing.
We're like naming our podcast Alfalfa. And if we want to actually drop the Alfalfa, like most times it's pretty complex. So like how well do you like how deep do you want to get when you describe where the Alfalfa is versus just it's rarely like, hey, buy this, number go up. It's rarely.
I'm happy to break people's brains with weird DeFi strategies, but like I said, I don't know how well it's going to translate.
We can
to the pod format.
Try to get some feedback and go over the basics, but I think it's important that people understand like you gotta learn it. Like I don't know if standing on the sidelines is a good option, because all these opportunities are coming. There is alpha to be had. There is like long-term wealth to create. And people you can't just be one of those people like, oh, I don't know stocks, so I'm not going to invest like that in this world where your money depreciates, 6 to 20% a year. You just can't take that stance. And there's varying degrees you can play in, but, hopefully there's tons of resource out there, but hopefully we can kind of build people's knowledge step by step and just, kind of force feed it and make people realize you got to kind of take ownership over your, your personal finances. And this is one way to do it.
Well said. Nick, do we have any announcements to wrap with or anything? We need some level, by the way, of like formality here.
Oh, like, Mr. Right. Fucking free-flowing wants some formality.
I mean, it's good and all, but like, maybe in the beginning, like a little like, hello, everyone, no, I hate that stuff. That's what I'm against. But just something like if we ever have like announcements, we should probably do them in the beginning. But do we have anything
we don't have any announcements now, but I do want to get a reaction on one of our reviews. So this is one of the reviews in the podcast so far, and I think this episode is perfect for it. So it's like
so where do people leave reviews? Where are you reading?
Oh yeah, good point. They leave reviews in Apple Podcasts. Go rate and specifically review. It does help us. That's where we look at the feedback, and I think the funniest reviews are the ones we want. You can certainly get nerdy and give us a factual review, but the funny ones are the ones we want. Maybe mention Eric podcasting from bed if you want an easy win.
Pinned on my double chin for 36 minutes.
God.
So Johnny Cosmo left a review. Quote, I'm either going to get really rich or really poor really, really fast while listening to this. And either way, it's going to be awesome. So depending on which part of this podcast you listen to, whether you're going to buy the top of Wolf Game or, yield on stable coins, either one is probably going to happen. So
I think we should run an ad to that screenshot of that review and just be like, subscribe.
Great.
Really rich
for that.
Or really, really poor is a perfect review.
Also really, really fast. So
yes.
it's like the barbell on Adderall.
It's very easy to get
approach to investing
very
on Adderall.
poor, very fast. I can confirm that.
All right. I love it. Good stuff, boys.
Great.
More next time. Good to see you guys.
Love you guys.
Peace.
Later, boys.
Later.